Good afternoon, Scott Redler T3 Live. Welcome to today's recap. It is Monday, the start of a new week, the start of a new month, and things basically are back to where they left off in May. I know that in the beginning of May, everyone was just throwing opinions out, sell in May and go away. This is the worst month, disaster, and I think that's kind of irresponsible. Whereas the action typically tells us what to do and how to do it. Now the same guys that have been blaring about selling May and going away, they're talking about the June swoon, and it just puts thoughts in people's head and makes traders who don't drown out the noise a little skeptical about being involved in certain stocks that have nice chart patterns or stocks that are trending or breaking out. And then every time you get a little bit of a move like we had this morning where we opened up, went through Friday's high, and then high beta was weak. A lot of people started just shorting. Okay, for me, I loosened up on some longs, but I just wasn't shorting. But those that keep doing that and getting short because they're listening to everyone and all the doomsday guys, they're like spinning around and getting frustrated, and they're missing big parts of what's going on in the actually daily action. I know it's a little harder where we are in the market. We're a little bit overbought, and we are extended from the 821, so it makes you think that we could come in, and if we do come in and hold those areas, it's still deemed strong and healthy because most strong indices do follow their 8 and 21 day, and it's hard for them to stay elevated above it. So you don't want to have too many longs on if it's a little frothy, which is how it felt a little bit going into late last week. But you keep making trades. There's a lot of different individual patterns out there, things to do. So let's just get to it. So you look here at the spiders, and just to backtrack right here because I think it's a really good lesson. I know a lot of people out there were thinking very, very negative right here. That made sense. Right here you had your false breakout. Right around the 21 day, hugging it. Were we going to break this intermediate support? This is, I think, when Tepper came out and things looked pretty bad right around here, and that's when Gartman and Ralphie and DeMark and everyone said we're going to be down 15-20%, and then this day happened. Boom. So as a trader, you have to drown out all that noise and say, you know what? We did not break down below this intermediate trend. We actually made a small higher high of the past 4 days, cover some shorts, or at least get flexible to see what's next. If you got longs, even better. And then from there, boom. So now this is where we are. Last week we started with a gap up, didn't fail, didn't just come in, it held higher, and now we've been just, pretty much trickling higher above the 8 day, above the 21 day, and lots of different movement across the board. Just to roll through some quick sectors, let's just take a quick look at tech. Tech still, after breaking above the descending channel right here and holding what was deemed a neckline, still acting decent. It still above the 8 day, and strong sectors could even come back and test the 21 day, and it's not a bear market here. But if it stays above the 8 day, continues to flag, that's what makes it a little bit easier for intermediate or active guys to stay with some longs. So right now they shook the tree a little bit, but nothing special. Same thing goes with the IWM. Everybody, as soon as it ticks down, every bear comes out and says, I told you so. Meanwhile, still, decent bounce above the 200 day. It did fill the gap. This is still not a source of strength. It's just not that much of a headwind right now. So you have to be very careful when you try and do things in this group, which is still a laggard group. Yes, you had a day one here, day two. This is why we sell on day three. It could have held right here, okay, and created a bull flag above the gap right here, which would have been pretty bullish considering where it came from, but it didn't. But still, it didn't fall apart. It didn't close in the lows, and still just needs some time. So you got to give it some time. So that's what kind of is going with a lot of these high beta names. Lots of them had big moves, and the question is, how much higher will they hold? Do they hold extreme upper levels, or do they break upper flags and test areas that they broke out from or a little bit higher? And one of those cases was Google today. Google came in pretty hard, pretty fast, and that was an example of how if you buy a dip too early, it could definitely blow you out of the trade. And if you're continuing to buy, it, I guess you got saved, but to me it's a little hard to do. So if you look at this trade, this was the descending channel. Okay, this was your break above, retest. This was the calculated buy. This was the calculated buy, and then you sold some strength. So you look here at this flag. So you try and just show you kind of what I'm thinking. So if you were in this still right here, this is your point of reference, which was 565. Once it broke it, if you were playing for a high-level flag to continue to the upside, that means that trade just changed. If you were playing for maybe a buy the 8th day or buy a retest of this area, that's different. And then if you're in here and you're playing it for that, you better know you have the pain tolerance for that. So today, it was down a lot. It wound up breaking below the 8th day, coming back up, still looks okay, but your entries and exits definitely mattered there. Where on NFLX, it held that upper level and rallied towards the highs. So some people were talking about shorting 411.61 because they're like, look, Google broke below this area, so somebody probably made some quick money once it did because it wasn't saved. But if you did that same press trade on NFLX, you probably got squeezed. This is still above the 8th day, and it's still showing some strength, and dip buyers keep coming in, but there's no setup. Here was your setup. Even right here was a bit of a setup, and now it's got a 2-day range, and I guess tomorrow this will be your pivot to see if it squeezes through and whether it holds. But these squeeze through and holds in these upper areas are sometimes prone for like what happened with Tesla. Tesla on Friday was one of the strongest stocks on the board, pushed through the highs, looked like a great long, came back in, people like, oh, let me buy this dip, and it just turned into a bigger dip into a red bar, and then it had 2 down days. So you look here, sometimes, a trade like that, this is different than NFLX, okay? But if you go for a move back, just say you call it going back to the well, on a flag, it pushed through, and then it didn't hold the momentum level. So my rule is, if it pushes through, just say 212.49, it went as high as what, 214 that day, you had a quick scalp, and when it came in and didn't hold it, you get out of the way, because if you bought, chances are you got stopped out here. Some people are actually, been looking for some type of cute short, because this is somewhat of a rising wedge, and it came back into resistance, and it's still a little bit overly valued, quote unquote, and the momentum still hasn't shown you that it's ready to, these high growth stocks are ready just to continue to back to high. So back to here made some sense. So if you got short on the topping tail, there was a trade below the prior low, but it held at 21 days. So guys are like, what do you do now with Tesla? Now it needs time. It's not pent up. It's not an A+ setup. All you have here really is potentially, I guess, a new little, somewhere like, oh, is it a bull flag? I guess you could say it's still in the top third of this area. You could trade verse here. The longer it stays in this, now bigger channel, I guess the better chances we do get some kind of setup. But for right now, there's really not much of a setup. Same way for Apple. Everyone's like, Red Dog, when are you going to get fully back committed to Apple? You were so good with it, committed to it here and to this little topping tail, which is how I traded on a micro sense. I think I was, long in here, got out on this 5th day, then waited, played a little day trade here, which was a nice one, into this small Red Dog reversal. Then I remember this was the beat steal right here. I think I went out long, and then chances are this was your Red Dog reversal. Here was your add. Here was another tight setup, and then on Friday became a little loose and traded above this area on the Goldman upgrade. And then today there was a cute short, but not a juicy short, below that 628. That's actually where I made my money in my day trading account today, was short Apple. Believe it or not, I actually did it for once. Anyway, what did it do though? If you pressed here at the 8th day, didn't get rewarded. You ruined a short versus taking it into support. I did not buy the 8th day because I just didn't want to be early. So now everyone's like, what do you do with Apple? The developers meeting is done, okay? And they did everything that they were projected to do, but there were no surprises. So at this point, you don't have much to do. All you have is a new range, okay? So question is, how long does it stay in this range? And does it hold, just say, this trend that's been intact since earning? This could become pretty noisy for the next few days. So take it on a 3 and 5 minute chart and give it space. Or if you think, which I do think, this will not be the high of the year, 644, then you just have to have a little less and give it time to play out and wait to see how it reacts after the split and just go through a few things. But all in all, on a technical level, nice little spot here, here, even here. Now it's probably back into range land. So trade it as if it's in range land. And then you have some decent setups in a few names that might trigger above a little bull flag, just some one-offs. Yahoo, it's been a bit of a laggard, but I guess you could say that it has a tight pattern just to watch for tomorrow. Look to see what goes on here. It's above the 8 and 21 day, a little bit of a laggard. Baidu, it still held above this breakout here. Okay, it had a little bit of a red dog reversal there, flagging. So this is something to keep on the radar, that this accumulation pattern is showing some commitment. So that's something to look out for maybe tomorrow. Some on the VTF, we're talking early on about one of my past stocks I used to trade is Dunkin'. Dunkin', not a leader, but so, you talk about plays. This was a play. This cleared an area, showed strength all day. See how it acts at the 200-day. Starbucks, technically better. Also gave you a trade, and if you're looking for a trade, and that's what traders do, here is when it broke above this lower level. Quick move. What did it do? Consolidated. Now it seems like it might even want to go a little bit higher. So, these type of trends can change. And then some were saying, okay, what do I do with Twitter? And when we talk about the philosophy of day one igniting bars typically happen on volume. And in order for them to lead to day 2, day 3, day 4, we need to see if there's commitment to them. So how do I measure commitment? Whether or not that igniting move holds the top 25%, 3rd%, or 50%. And depending on where it holds, it tells me whether it's valid and fast, valid and slow, valid and almost, or, a one-day wonder. And I guess Twitter is a good example because, you look here at this igniting bar, okay, that took place at that point, looked pretty good, right? Descending channel gave you a nice wide range bar and also a sellable open, so it gave you a little follow through. Then when it came back below this high, could have been one sell signal, and now it pretty much gave back the majority of this entire move. So if you go here, let me see if even the retracement rules are here, okay, just to show you just on a Fibonacci area. You go like this with the Fibbies, and you go like this, it already, let's make it a little bit bigger. Just as education purposes. Right here, this was the igniting move, little follow through, so you can measure it from the top of the follow through, or you could measure it from here. Most people do it from here. So if this was going to stay valid and very fast, which probably should have held here, but it wasn't. If it was going to stay, pretty fast, it would have held right here, not break below. And then I would say, being Twitter, you were giving it the benefit of the doubt, saying, okay, maybe 33 holds, and boom. Now it's already given back way too much of this move, and now it turns into just being a nothing. Now it's got to have to do it all over again. If the trade is not pent up, not worthy of blindly buying a dip because you saw no commitment to this day one, and it did have potential because it also had volume on that day. This was some pretty big volume. Okay, same thing goes for here. Remember this, just to show you an example. Remember this, day one here. Let's just get the chart a little bit more legible. Okay, this was day one, right? Day one right there. Could have been a nice trade. It could have been a new trend. Let's just show it like this. And this wound up actually holding the top half of it, so it gave it a little bit move to higher highs. But then once it recrossed here, that trade was off. You no longer had commitment to this wide range bar that had volume. It tried because people thought maybe that was it, and it wasn't. So who knows? This might not have been it. So at this point, to me, it's not an A trade. Facebook, held in a little bit better today. At the end of the day, I got in a little bit. I came in flat Facebook overnight. It's at some decent resistance, but it's flagging. It's holding the 8-day. You're seeing some commitment to this trade here. That was a good one for us. So, maybe they're trying to keep something in the game, but I kept it light because you also had something like LinkedIn that, 2 days down. Some are saying this was it. Who knows? There's your bottom tail. And here is a bit of an ascending channel that we now broke below. So that takes out some of the momentum. It's not pent up. Now that needs time. You look at Yelp, that this one actually held in a little bit better. Here's your bottom tail, the same day that happened with LinkedIn, which was right here. And then this is, I guess, somewhat of your ascending channel, that this is holding up better than a LinkedIn. So see if that continues. But these are the things that you have to be thinking about when you're ready to get your plan together to execute. What still is an A trade? What might have went back down the line to a B, B minus, not worth your time trade? What needs time? What's overextended? What's holding in better? Where are the price points? What's other high beta names doing? What's the overall market doing? Got to process this all at the same time, and you can't do it starting at 9:30. That's why you got to start your day real early. I start mine at friggin' 4:45. You can catch me on Twitter, and then I'm writing my note between 6:30 and 7:15, so you guys could have it if you're a part of Redler All Access by 8:30. But I'm doing that because it's helping me rehearse my plan, so I know what's going on, so I can process things fast and execute on them even faster as the market goes. So now, it's going to be a big question to see what happens with these banks. To me, this is the first time it's kind of set up in a while. All right. If you just to take a quick glance, I know if you just say you sold when you had this false breakout here, or you sold when you had this uptrend broken and the 21-day gave way, or at least reduced risk on this, even if you had it from $7, $8, whatever, you now have a decent setup. I would have liked more volume, but it is what it is. There's not that much volume out there. You have this descending channel here that gapped up and pretty much trapped all the people who get out of it here or short, and it's holding sideways, and you have a nice bull flag in front of the 200-day. Hopefully we see explosive volume coming in and we get a nice additional trade to get in the scalp. I don't think it's going back to 1750, at any time soon, but if they wanted to keep the market somewhat strong and squeeze a little bit, there's no reason why this can't go another 20 cents or so. So that's why I'm in Bank of America, and I actually have a little bit more Bank of America than I've had in a while today. I added to it, so we'll see what happens. Hopefully, it opens up a few pennies and we could actually buy a heck of a lot more through here, and then we could trim and trail it. We shall see. I also bought a little Morgan just because, it's also acting somewhat better. You have a pivot level here. You have a small bottom tail there, so it's worth a little bit of a look. And this is actually above the 200-day, so it's actually acting a little technically better. Best in breed, Wells Fargo, look where that is. I'm also in a little LVS in some of the casinos, which is a little speculative because Wynn is coming out with some numbers tonight, but I feel like it was coming into an inflection point and breaking through it a little bit, had a nice bull flag, holding higher after breaking above this wedge and holding the 200-day, so I'm in some, have a decent mark. We'll see what happens tomorrow. Wynn looks decent. Also holding higher, maybe that continues, and MPEL was actually the strongest one today, where it closed near the highs and engulfed this little range and held this, and that could continue, so we'll see what happens. But the problem was there was no volume there again. But you have to be very, very, I'm a patient guy, but you have to be like super duper duper patient and do nothing if you're going to hold and say I'm waiting for my best setup with volume. If that's the case, you're probably not trading that much. Maybe that's good, maybe it's bad. But I have to take some of these trades even if there is no volume and it's not perfect, because we haven't been in a perfect tape for a long time. TBTs to end it, had your oversold bounce. We talked about this red dog reversal right here. So it led to actually a 3-day move. But look what's been going on here. The 21-day moving average has been holding this thing down since March, actually since almost breaking here. So the question is now, can it go sideways and break and close above it and start a new trend? If that does happen, then rates could inch higher, and then maybe the banks get a little bit better. So in closing, I hope you had a decent day today. There wasn't a heck of a lot to do. It was very easy to overtrade. There were a few different trades across the board that could have paid you. I know you're a little frustrated that I'm not that active in Apple, but we had a cute short today, and I just wasn't ready to go back long for a swing. I think I could be a little bit more patient there. As far as the other names, we went over a lot. I think there's stuff to look at tomorrow. Market continues to stair-step higher, and until something happens extreme or decisive, you got to stay with it this way. You can't trade based on a Minsky moment that might happen, or something that could happen 6 months from now, because chances are if you're just shorting for that to happen, you're going to run out of buying power and you're going to blow up your account, whereas everyone else just runs out of ink. On that note, have a good night. I'll see you tomorrow morning.